May 1st, 2025. I had some interesting trades I mentioned in my Discord earlier, but I took some interesting trades today. I'm kind of excited to go over. One of my problems last month was I did not push my winning trades enough, and my losers are too big to not be, pushing my winning trades. So I was trying to think of ways to do that over the weekend and thinking about ways to scale in when there's an increased chance of a symmetrical second leg being the winner. So I'll go over that in a little bit here. We had a gap up. 2, 3, and 4 might get a second leg, but as you guys know, it's before news, so I do not trade bars, before bar 7. Bar 5 and bar 6 is good enough to probably get some sort of symmetrical second leg, and that was one of the reasons why we came back down to this area late in the day. We obviously sold off straight through it. We ended up with a big triangle, and we broke out below it. It's not a very clean triangle, but it was a triangle, and we broke out below it. 9, 10, and 11 was a good 3-bar micro channel. I thought it was a leg 2, so which could be an issue because it's possibly a trading range. But I thought that it was enough that it was worth taking a chance that we got a second leg. So I bought the close of 11. We broke out above the bar 5 high, and we pulled back to test it on 13, like breakouts do. And then 14, a big bull bar. When we got 14, I thought odds were we were going to get to the symmetrical second leg. So I was looking for a way to enter more because, as I mentioned, I'm trying to work on pushing my winning trades. I also know that when I get a 3-bar micro channel, the odds of getting immediate follow through are about 37% as of right now in my study. So if it's low probability that we get immediate follow through, when we do get it, what does that mean? It means it's a surprise. And so I thought 12 was a bit of a surprise since we did get immediate follow through for the bulls. And 13 pulled back, tested the 11 high, or sorry, the 10 high, and then went up further on 14. I bought the bar 12 high during 15, knowing that the symmetrical second leg was up here, and I thought we might have to get up into that area. Also, after 14, I thought this was a good enough bar that it increased the chances that we get there. If 14 had a large tail on it, maybe we go more sideways. But I thought the price action on 14 was strong enough that we go higher. So I bought the close of 11. I bought more at the 12 high during 15, and I got out at the close of 18. My profit target was like 1 or 2 ticks above 18, but I just got out on the close. It's okay to buy the close of 18. The problem is you're buying a late leg, right? 1, pull back 2, pull back 3, pull back 4. So 4 legs up. But you can still buy and take a chance that you get another leg and you do get the symmetrical second leg on 22. I didn't buy it, and since I would not buy that, I would not buy this either. And the reason you don't trade late legs is, yes, this one might have worked and you made money, but if you took this one too, you would have lost money. And you most likely, if you're doing it, I say, right, quote unquote, if you're doing it the way that I'm doing it, I would have lost a lot more on this trade than I would have made on this trade had I taken both of those. So I'm trying to be very focused on taking leg ones. 22, 23, or sorry, 23, 24, 25, 3 consecutive bear bars, tails. It's decent enough for me to think that we're in a trading range. If we are in a trading range, this could be the top of it. The bar 5 high could be the top of it. So lower trading range, possible breakout, possible upper trading range. 3 straight bear bars, 24, 25, 26, pull back 27, a bull bar. Okay to sell the close of 27, expecting another leg down. Or sorry, 26, expecting another leg down. I did not take 25. The channel up was pretty tight. Had 25 close stronger near its low, I was going to take it because I thought it was leg 1. I think it's, like I said, my 2 main focuses of the month this month are to be very focused on trading legs 1 and 2 and avoiding legs 3 and 4, and to be very focused on pressing my winning trades and being a little bit better about getting out of my losers. So, all the good things, try to increase my win rate and decrease the size of my losses and increase the size of my wins. Basically, the same problem every trader has. 29, we have basically 3 perfect bars, 27, 28, and 29. It is a second leg down, you could argue, because 26 is a pullback. However, it's a 7-bar micro channel for the bears, 23 through 29. So I thought since 27, 28, and 29 were basically perfect, I gave it 85% on the 10 plus 2 from Ellie's white paper. And so I sold the close of 29, but I also sold one of my scalings. So the way that I've been working on this essentially is, Well, it's in the video in the members area on how the way that I trade. I made a big video on it. I'm not gonna make another one, but I essentially sold the close of 29, and I sold more of my first scale in. So I sold the close and my first scale in, instead of taking it at the scale in price, I just sold the close more because I thought this was strong enough that it might get immediate follow through when you get these perfect bars. So I got 1R on 30, which was, it's obviously not always going to work out that well, but I sold and I got 1R immediately on 30. 31, 32 consecutive bull bars. Don't buy 32. It's this 8 bar, 9 bar micro channel against you. So if you're buying the close of 32, that doesn't make a whole lot of sense against this much bear strength. Odds are this is just bears taking profits because of the large climactic bar on 30. We're going to get another leg down. 33 through 35, I did not take. I thought, 3 signals in a row might be a late leg. It's at least leg 2, potentially leg 3, but you do get a symmetrical second leg to the tick down here on 41. I did not take 37 either against this. I thought 33 through 35 was strong enough that it's probably better for me to not take 37 or 38. So I decided to wait. It's approaching the moving average as well. You could have taken it and scaled in and you would have made money. I did take 43. I don't usually, it's 1, pullback 2, pullback 3. So it's 3 legs down. So 43 is leg 1. It's a large surprise that broke out above the bar 38 high. I thought it was important that we got such a strong close, a couple ticks above the 38 high, since that's the breakout point. So really good looking bar for the bulls. I ended up buying more during 48. Again, just taking away my first scale in. And then I bought more at the 42 high, and I got out at break even on 52. The reason I got out at break even on 52, it's very possible that this is leg 1 and that we're going to need a second leg. But 50 and 51 is way too strong. So for me, 52 is just a good spot to exit. This, I used to love this trade as a swing trade, and I used to lose a lot of money trading. So that's what my brain sees when I see 52. It's kind of a beginner swing trade it'll work enough times, like in the right context, it'll work enough times that you'll keep thinking that you're doing the right thing, but you're going to end up losing money over time, unfortunately. So I don't love buying here. And if you do buy, you probably wanted to see 53 race up, and instead it was a doji bar. So for me, I just used 52 to get out at break even because it's not a high probability trade. 52 is a low probability trade. And a lot of traders in the high probability side, 50, 51, they know 50 and 51 is going to get some sort of second leg down. And it ended up being small here on 53, but a lot of times it'll fall below 52. So the swing trade worked this time. And I ended up getting out break even. I bought 57. It's a 7-bar micro channel. Sorry, 6-bar micro channel. So I bought the close of 57. And I scaled in during 59 and 60. Basically, my first scaling got hit here. My second one got hit here. And then I got a symmetrical second leg up to here. So basically break even here and a couple wins today. I thought that it was a good trade. It might be leg 2 in a trading range, which is problematic. And 59 is a really good bar for the bears. However, against this micro channel, 6-7 bars, it's a little bit difficult to sell 59. However, since 59 is a good bar and the tail on 60 was a big bear bar at one point, meaning on some time frame, 59 and 60 is a good looking bear move. Odds are we had to go at least 1 tick below 60. So I was glad that I got out up here because I did think we would fall at least 1 tick below 60. And I did not really want to be sitting through a pullback that went all the way down, into this area. I thought, I was really hoping to just get out here, which I did. I probably have to work on a better exit strategy for getting out, in later legs, because there's an argument, like I mentioned, to be made about holding through this, since this was leg 1 and you should get at least 2 legs up. And the 15-minute chart was pretty good. The bulls had this going for them the whole day, right? So this whole rally was this. So odds were we get a second leg from it. And that spike, that bar 48, the big bull surprise that I mentioned, is this bar. So although odds were that we pulled back to this area, we still should get a second leg up for the bulls. So, but it's difficult to buy, right? This is all 5 of these bars are bear bars on the downside there. So it's big up, big down, big confusion. So this is one of the reasons why I stayed away from this. It was touching the moving average and 5 straight bear bars, though I thought it had a reasonable chance of working. A lot of 3-bar micro channels today. 3, 4, 5, 6, 7, 8, 9, 10, 11. 12, but it's the last bar. And 11 of them, or 10 of the 11 got symmetrical second legs. As I've mentioned a bunch of times before, it's a high probability trade, but the risk reward can be bad at times, which is why it's high probability. So you have to learn how to take advantage of that. So I'm not surprised that we fell below 60 since 59.60 enough for some sort of second leg with the tail on 60. 5 bar micro channel, so probably not going straight down, and then 5 bar bear, 6 bar bear micro channel. So this reversal should ultimately fail. 69 is not really a great buy. Probably sellers above scaling and higher since we had 6 straight bear bars, but hard to sell above after these 2 legs down and this 5 bar micro channel. So I'm telling you all the problems with both sides because it's a trading range. And then obviously we tested back down to here at the end of the day. As far as the daily chart goes, this is an outside bar and it looks like we're towards the top of some sort of trading range. If I had bought above this bar, I think this is disappointing follow through. So I think maybe a small second leg sideways to up, but I think we're probably going to go below this low. So I am expecting, this is a pretty large bar, but I am expecting that we get below the low of this outside bar. So I do think we come back to this area. This is a big enough bar. It might need a symmetrical. It should. It's going to get a symmetrical second leg. So do we go up here first? It's not a coincidence that the top of this bear spike is where the symmetrical second leg is. The computers do that on purpose. But do we go up here first or do we go down here first? Tough to say. I would say probably a little more likely that we go down here first before we get that symmetrical second leg. But this is such a strong move that it might just go get it. The weekly chart. Is this right? So tomorrow, okay, tomorrow's Friday. It was the first day of the month, so I started thinking it was the first day of the week for some reason. The Bulls want to see this close basically on its high. They want as good a bull bar as possible, and the Bears are hoping to get below the open. It's only 60, 70 points below, so that can happen tomorrow. It just depends if we start to get some sort of bear move. But the Bulls wanted to see a bar that looked exactly like last week's bar. Probably not going to happen. They're hoping to get at least a strong close above the moving average. Again, doesn't seem like it's going to happen. So I think at the most we get up to the high of March 24th and then start to go sideways in a trading range. And then the monthly chart, if you're a bear and you're looking to short for any reason, not really that great. We might have to close this micro gap. I think the bears who sold all the way down here, here's the thing. The bears who sold all the way down here probably did a reasonable thing. So they might have to get rescued at some point. So I'm not really that convinced we're done with 5,000, but we might have to see 6,000 again first. I'm not really that sure. It's a trading range, it's trading range price action. So I'm interested to see what this monthly chart looks like. But I know that a lot of 3-bar micro channels do not get immediate follow through. So I would not be surprised if we got a bull close this month. All right, that is it for